And welcome to ETF Edge, your go-to place for everything exchange-traded fund. I'm your host, Bob Pisani. We're all coming to you virtually today. I'm joined today by Ed Rosenberg. He's the Senior Vice President and Head of ETFs at American Century. And John Davi is the CIO at Astoria Portfolio Advisors. There he is. Nice backdrop there, John. Nice home. Good for you. John, let me start
Thanks, Bob. Good to see you.
with you a little bit. Things are a lot different, John, than they were 10 days ago. The volumes seem to have dropped rather notably in some of the big ETFs like SPY and IWM. They seem to be about 30% lighter. Volatility is dropping. If you look at the VIX ETFs like VXX, not only are they declining, along with the VIX, of course, but we're also seeing trading volumes a bit lower in those as well. John, what are you seeing in the ETF market right now? Just give me 30 seconds of what your overall observations are.
I think things are normalizing a lot more. So bid offer has come down. I think that, the Fed with their announcement that they are dropping interest rates, to basically 0%, buying corporate bonds, buying more treasuries, that really kind of helped dislocate, provide some stability to a lot of the dislocations that we're seeing in the marketplace. So I'm encouraged by the price, encouraged by, more orderly markets as opposed to a couple of weeks ago when things were really, really kind of wide. So I think overall, things feel a little bit more normal. I know the economic front is going to look pretty bad and it's going to look real ugly in terms of unemployment claims. But price action and ETF front have been encouraging. And then not only that, Bob, but there's actually been more inflows into ETFs too. So, Vanguard took in a bunch of money in Q1. Yeah. And I think, shows that the retail investor has been kind of hanging in there for the most part.
Okay. Ed, would you agree? I know it's a little broad to ask, is the worst behind us, but give us your 30-second take on what's going on right now.
I mean, I'll agree with what John said. I've definitely seen spreads come down and the market's calm while volumes have been dropping. It seems that the market just needed some time, what I'll call, to settle into the reality of what's going on. And as we go forward, I think investors have started to take into account, the potential issues that, with all the stay-at-home that we've been in, what that actually means. And so they're looking for signs here and there to jump back in. But I do believe that the market itself has settled, and we've noticed spreads have settled into not what they were before this started, but to a very reasonable level with where the VIX is right now.